of numbers coming in from Tata Steel. The consolidated EBITDA number did miss our estimates and the margins as well. Now, two big factors played out. One was steel prices were weaker. The second factor was they didn't get any benefit of, lower coking coal costs. So both those two resulted in a miss on the operational front. For the India operations, we were working with the margin number EBITDA per ton of around 10 to around 11,000 rupees per ton. It came in at around 8,800 rupees per ton, and you'll see a declining line if you compare it on a year-on-year basis as well as on a Q-on-Q basis. Moving to the European business, more or less in line, we were working with a number of around $110 odd. It came in at around $115 per ton, and in rupee terms, is a little less than 10,000 rupees. The other factor that played out was that the net debt went up by close to around 17,000 crores odd. That's because of three big factors: NINL acquisition, capex, as well as they did pay out some dividend. Now, CLSA, they are cautious on the company because they've gone ahead and downgraded the stock. They've cut the target price as well. And the key reason is they're expecting profitability to decline from now on. So they've cut their estimates by close to around 18 to around 20%. On India business, they say margins will recover. However, the risk is that prices could be under pressure in India because imported steel prices are a little bit cheaper in comparison to domestic prices. On Europe, they see a big risk out there, because spreads will contract and also the contracted steel sales prices will come down. In fact, yesterday I had a chat with the management on the call and they gave us guidance on two factors. One was on the outlook on coking coal cost, and the second factor, they gave us the guidance about the European operations for the second half of the year. Let's hear them out.
Most of the coking coal we used was coking coal that we had bought in the previous quarter. So we really did not get any benefit on an average. Of course, the coking coal consumption cost in September was lower than July, but July and August it was actually moving upwards rather than downwards. So we'll start seeing the benefit in Q3. Europe may be about $100, India would be about $90. The second half for Europe will not be as good as the first half. That is clear, simply because the rising energy costs would have an impact, though over the last 3 weeks, as you would know, the gas prices have dropped very significantly. So maybe Q4 will not be as bad as we thought it would be. No, not negative. It won't be negative, but let's see where it is.
Okay, let's talk about Axis Bank as well. That's the big nifty loser. 1.3% equity worth 3